Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today, it's Tuesday. It's February 28th, and right now it's about 7:46. The market's going to open up in about an hour and 45 minutes to be exact with you. Now, as you can see here, the NASDAQ is up a little bit. The Dow is up 87 points, but keep something in mind. We've got earnings for Target coming out in about an hour and a half. And so far, we're up about 2%. It'll be very, very interesting to see what those numbers are. And if they do come out better than expected, we could potentially see a rally in the consumer discretionary sector. Although, looking at things right now, I would be very, 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 very cautious because we're below the 200-day moving average. Remember, we rallied. Everybody thought we were going to break out. Didn't quite work out that way. Also, if you look at momentum levels, let me just kind of go through this. You will see that consumer discretionary is at 50th percentile, but here's the problem with this theory. If you look at the longer term trend, you could see it's coming right down. So it doesn't look right now like there's a lot of upside in this sector, which makes me really, really concerned, really concerned. And if you look at the broad market, you will see, let's look at the S&P, we now have only 46% of stocks trading below the 50-day moving average, and it looks like we're coming down. So if we break this momentum level, there's a pretty good chance we're going to go back down. So I would be very, very cautious. And if you are swing trading or position trading, be really, really careful today because it can be one of those days. It could really be one of those days where the market can start up strong and end on a weak note. We got to be really cautious. Let me tell you another reason why we have to be really cautious. ADT's coming out with earnings today. AAP's coming out with earnings today. This is aside from Target. AutoZone is coming out with earnings today. Cracker Barrel's coming out with earnings today. First Solar's coming out with earnings today. HP's coming out with earnings today. Smucker's is coming out with earnings today. So you could see Monster Beverage is coming out with earnings today. Norwegian, let's take a look at Norwegian. I remember we were talking about shorting Norwegian. Let's take a see how it looks here. Norwegian looks like it's going down. Remember, I gave you guys a trade in my VIP room yesterday, a bonus trade. Actually, it wasn't even me. It was Kane. And he told you that on this day, the next 3 days, Norwegian goes down. And look at it. It's down already 5% at the open. So there's definitely something to seasonality. And thank you, Kane, if you're watching this video. Thank you for that seasonality analysis that you did. It was wonderful. I really appreciate it. Hopefully some people made money on this trade. Let's talk a little bit about global economy and go through the nitty-gritty from there. So 3 major U.S. benchmark indices ended the regular session higher as investors digested early round of U.S. economic data and hunted for bargains following the worst week of the year on Wall Street. Ouch. I hate to say it, but I told you so. On Monday's trading session, Tesla led the gains in consumer discretionary, surging over 5% after the electric automaker said its German production plant was producing 4,000 cars per week ahead of schedule. That's crazy. Again, I'm having a lot of problems with Tesla and their self-driving mechanism. Elon Musk he wasn't very honest with that with people, but it is what it is. Data on Monday showed durable good orders fell more than expected to negative 4.5% in January, but core durable good orders increased 0.7% in January. So it's one of those things where we have to take it with a grain of salt. More importantly, let's again hear what the Fed says. And the Fed says they've been extremely consistent. Let's put Powell out of the picture, but they've been very, very consistent. Fed Governor Jefferson said Monday that inflation for services in the United States remains stubbornly high. I'm under no illusion that it's not going to be easy to get the inflation rate back down to 2%. He said it right there. It's going to take longer, and they're going to have to probably go to 5.2, 5.4, and the market's not appraising that into its value as of yet. Earnings front, Zoom Video Communication rose 6% pre-market. Good day for the NASDAQ on that, after the company reported better than expected results and upbeat profits. Everybody and their mother are using Zoom, right? At the same time, Workday slid less than 2% in pre-market trading after the company posted better than expected fourth quarter results. But its first quarter and forward guidance fell short of expectations. It's really hard to project good numbers right now when we're getting into this economic environment that we're in. Meanwhile, Target, Monster Beverage, H&P, and Norwegian are set to report today. And yes, we gave you a bonus trade on Norwegian in the VIP room. We set to sell it, and it's down 5% right now, which is pretty darn good. Consumer confidence data is going to be released. That's the big report today, in my opinion. Consumer confidence is very important right now because we have consumer discretionary earnings on the table. Let me give you an idea of what to expect too. Here we go. Consumer confidence. Let's go there. Okay, so they're looking at 108.5. The range is between 105 and 110. It'll be really interesting to see how that number comes out. It doesn't come out for another 2 hours though, so we do still have some time. We don't have to rush into anything right now. But things are looking kind of mixed. Very mixed signals. Target's up a little bit, but they haven't reported yet. We got the consumer discretionary. Be very cautious. Looking at the big picture, which we'll do right now. Oops, that's definitely the big picture. Looking at the big picture, I'm not happy with what I'm seeing here. This is not happiness. And a matter of fact, this could have been a shakeout, but I don't think so. It looks like we're lagging. The key is going to be whether or not we continue moving higher on the Dow. If we can break this high, I'll be a pretty happy guy because it means we're moving higher. If we can't break above 33,181, not a good sign. Not a good sign at all, and odds are we're going to go lower. Looking at the QQQ, we are in fact in that range, but again, let's be very cautious. We're in this channel, and it's very easy for the market to go back below the 200-day moving average, which is what the technicals are actually pointing to. So if we go higher, that's actually against what I'm seeing right now, because I'm seeing this fail and go against down to the 200-day moving average. But again, earnings today are going to be the big deciding factor in all of that. Also, let's take a look at semiconductors. Semiconductors are actually outperforming everything, and they're looking good. So I'm hoping that tech will be able to save us out of this mess. Now, looking at sectors, notice, remember, let me just go back 1 week. Communication, right? Technology. Now look at it today. Technology, communication. They're close to each other, which is good, but I think they have more downside to go. I would find it very difficult with the Fed saying the inflation is stubborn, technology and communication services giving us a major rally. Now, today is what? Today is Tuesday, and Tuesday I always give you the strongest sector, strongest stock, weakest sector, weakest stock. So let's take a look at everything right now. Industrial, I'm not so sure. It's making a higher high, but it closed near the low. Financials look like they're consolidating here. Basic materials, again, closed on their low. Technology closed on their low yesterday. Just pointing things out to you. Consumer discretionary did not, but again, not feeling it. But I may be wrong with earnings. Consumer staples look like it's congesting. I actually like consumer staples. I think they're ready to go higher. I like the energy sector right now. I really do. I think energy has a chance to go higher. So out of the two major sectors that I would be cautiously optimistic right now, it would be energy and consumer staples. Not so much, and let me tell you this, not so much because I see such amazing upside, but because I'm seeing some safety, okay? And safety right now is key. I'd rather be in a consolidation channel than be in a major downtrend. So we got to be very cautious. And what I'm expecting is I'm expecting these sectors to, let me go back here. I'm expecting the technology, communication services, and consumer discretionary to become friends again and move in together. So either consumer discretionary is going to move a little higher, or technology communication services are going to move a little lower. But one way or another, I believe they're going to become friends again. There's no reason for energy and consumer staples to be in between these two. It makes no sense. So what I think is going to happen, personally, here's my point of view. I think energy and consumer staples are going to move higher, and the rest are going to move lower. Now, since I mentioned consumer staples, the weakness right now, honestly, the weakness right now would be, in my opinion, in the healthcare. I mean, look at this. Healthcare, nasty. So if I was a betting man, I would probably go long either energy or consumer staples. And if I was a selling man, I would probably short healthcare right now. Don't know why healthcare is seeing such a nasty downside momentum, but it is. Probably earnings are just not as good as expected, but I'm not an expert on healthcare. I know that biotech really geared up last year, but we got to be cautious. None of these look good. And again, if I'm saying that the best sectors are defensive, that's not a bullish sign. Now, folks, I'm not trying to discourage you. I'm just telling you the truth from what I'm seeing with my eyes. Now, let's talk about strongest stock, weakest stock, right? So let's take a look here. Let's see. Steel Dynamics, Lamb Weston. Look at Lamb Weston. This is a healthcare stock, right? Look at how it bucks the trend. I love this stock. But honestly, if I was a betting man right now, I would probably go with Marathon Petroleum or Lamb Weston. I know it's healthcare, but I'm telling you right now, this stock, it looks so strong. Other stocks that are looking good, Power, Quanta, energy stock, and VLO. So you got VLO, you got Quanta, you got Marathon Petroleum. That gives you enough of the energy stocks. In terms of consumer staples, let's take a look-see here. I mean, Genuine Car Parts is a consumer staple. No, it's more consumer discretionary. Let's see here. What's the first stock? What's the first... isn't PCG Procter & Gamble? Let me just make sure. No, Pacific Gas. Sorry, I thought it was PG's Procter & Gamble. Sorry about that. Let me go back to my list here. Progressive's looking good too. I've been talking a lot about that stock. GE. No, that's not consumer staple anymore. Yeah, it doesn't look like consumer staple stocks are really in the upper end. I mean, General Mills, but I'm not really interested in it. So if I were you, and Campbell, if I were you folks, I would really stick with energy to the long side. Energy, or just stick to stocks that are looking great right now, like Lamb Weston, United Rental. Let's see here. The other one that I really liked a lot. Where is it? Ulta looks really good. Notice how strong these stocks have been. RE, look at this. Very, very choppy, but still pretty good. So there's a lot of good stocks, but we're very, very, very fragmented. And it doesn't look like we're going to get out of this anytime soon. So be very, very cautious. Again, right now, Target is slated to be up only 1.5%. But again, we don't have the earnings call for another hour and 2 minutes. So be very, very, very cautious here. Be very, very cautious. The market could be very choppy, very unpredictable. And the problem here is this. The bond market, it's near its lows. It's not near its highs. That's a big, 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 big problem. And if bonds break down, and they very might well break down, that's going to put more pressure on tech, semiconductors, consumer discretionary, and all the technology companies you guys know and love. So we got to be very, 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 very cautious here. Like really, really cautious here. Now, before I let you go, several technical and fundamental factors need to line up before I consider entering a position or sending you guys an alert. But for the first time this year, I've seen my number one buy signal flash in my breakout stock. Now, it isn't something that happens often. That's why I'm holding a special event at 1 p.m. Eastern Time on Wednesday to walk you through my number one buy signal and give everyone my number one breakout stock. It's going to happen tomorrow at 1 p.m. Eastern Time. Wednesday, the 29th of February. Oh, wait a minute. March 1st. There's no 29th of February. Today's the last day of February. Where has February gone? March 1st. And don't miss out tomorrow's presentation. You guys are going to enjoy it. 1 p.m. Eastern Time. Brand new, all live. We're going to talk about quantum, and we're going to talk about my number one stock for this year that I see flashing right now. Don't miss out. Follow the link below. If you're watching on YouTube, follow the link in the YouTube channel. And I'll talk to you guys real soon. Have a great day. Remember, post comments and feedback for me. And remember, you can find these videos on the rogerscott.com website or Wealth Press YouTube channel. Like it, subscribe, and comment. Bye. Have a great, great day.